All right, if you've glanced at your crypto portfolio today, you probably saw a whole lot of red and are wondering what on earth is going on. Well, you're not alone, and we're going to get into it.
Welcome back to the channel, finance people. If you are new here, a hearty welcome from the JoshLM finance crew. I'll be your guide today, so get your pen and pad out and let's break down why crypto is taking a nosedive.
So here's the deal. Bitcoin's dipped down to that $64,000 mark, which is its lowest in about 2 months. And look, it's not just Bitcoin. We're talking ETH, Sol, Doge. Pretty much the whole neighborhood is feeling the pain. But this isn't some crazy hack or a big scandal. It's actually a mix of some very real, powerful market forces, and we're going to unpack them one by one.
Okay, let's start with the biggest piece of the puzzle. Seriously, the number one reason for this dip, the one casting a giant shadow over everything else, is the U.S. Federal Reserve. Right now, what they say and what they do is king. It's moving markets more than anything else.
Now, to really get why the Fed has so much power here, you need to understand this term risk-off behavior. It's actually pretty simple. When the big money, the institutional investors, get nervous about the economy, they start selling off what they see as risky, things like crypto and high-growth tech stocks. And they move that money into safer stuff like government bonds. It's kind of like trading in your sports car for a minivan because you see storm clouds on the horizon.
So what did the Fed actually do? Well, they held interest rates steady, right in that 5.25 to 5.50% range. Now, everybody pretty much expected that part. The real kicker, the part that spooked the market, was that they gave zero clear signals that they'd be cutting rates anytime soon. And that matters because higher rates make borrowing money more expensive, which, tends to slow the whole economy down. The market was basically hoping for a sign that cheap money was coming back to keep the party going. And when that sign never came, well, people got nervous.
And then, just to throw a little more fuel on the uncertainty fire, we got word that President Trump nominated this guy, Kevin Warsh, as the next Fed chair. Now, he's known for being what they call hawkish. In Fed speak, that just means he's more likely to keep interest rates high to fight inflation, even if it puts the brakes on the economy. For risk assets like crypto, that's, let's just say, not exactly the good news we were looking for.
Okay, let's move to our second major factor, because this all starts to connect. We have to follow the big money. And right now, the best way to see what the institutions are doing is by looking at these new spot Bitcoin ETFs. Now, what's really fascinating here is the story this chart tells. You can see the ETFs kicked off 2026 with some really strong inflows. That's all the green you see. Big money was buying in. But then, that momentum just completely fizzled out. The green bars turned into these big red bars and fast. By the way, if this kind of clear visual breakdown is helpful to you, do me a solid and hit that subscribe button. We're trying to get to 1,000 subscribers, and every single one of you helps us get there. Thank you.
And this number right here, this really puts the scale of that pullback into perspective. In just the first full week of January, these ETFs saw net outflows of $681 million. That's a massive number. It tells us that the institutions weren't just slowing down their buying. No, they were actively selling. And that put some serious downward pressure on the price.
And this is a really crucial point. Crypto doesn't exist in its own little bubble. It's connected to everything else happening in the global economy. You've probably heard the saying, when the stock market catches a cold, crypto gets the flu. And right now, believe me, other markets are definitely sneezing. Tech stocks have been having a rough go. Microsoft, for example, missed on their earnings, and that sent a little shiver through the whole tech sector. And crypto often trades right alongside tech. Then, you add on top of that rising tensions in the Middle East and a little bit of diplomatic friction between the US and Europe, it all just adds to that risk-off mood we were talking about. Of course, you can always count on social media for some, let's call it, colorful commentary. This one I saw from a trader on X really summed it up. Fed says no cuts, crypto hears, sell everything. Classic overreaction. And it's funny because, there's a kernel of truth in there. The crypto market can be, well, let's say it can be very reactive. But here's another, more measured take I saw, suggesting this is just a natural correction. Somebody called it a hangover from last year's rally. And that's a totally fair point. Markets can't go up in a straight line forever. After a huge run-up like we had, some kind of pullback is actually pretty normal, maybe even healthy for the market long term.
Okay, so we've gone through the why. We understand the forces at play. Now let's shift gears and talk about the what now, right? What are the practical takeaways for you as an investor when you're looking at a portfolio that's bleeding red?
All right, let's just take a breath here. Here are 4 simple but really powerful steps. First, get that macro is king right now. What the Fed does matters, so pay attention. Second, and I honestly cannot stress this enough, avoid panic selling.
Emotional decisions in investing are almost always bad ones. If your long-term belief in your assets hasn't changed, a dip shouldn't scare you out of your position. Third, diversify. Please make sure not all your eggs are in one very volatile basket. And finally, number 4, keep an eye on those ETF flows we talked about. They're an amazing indicator of what the big money is thinking.
So what's the big takeaway from all this? Look, a dip like this does not mean the bull market is dead. It just means the story, the narrative, is changing. The market is shifting from a free money is coming story to something a little more complex. The absolute best thing you can do is stay informed, just like you're doing right now by watching this, and not let your emotions drive your financial decisions.
So what do you think? Is this all about the Fed and the ETFs, or are you seeing something else that's driving this dip? Drop your analysis in the comments below. I'd genuinely love to read what you think. Thanks for watching till the end. It shows you are serious about your financial journey. I know you got value from this, so do me a favor and share it with someone you want to be financially literate too. And I'll see you in the next video. Take care.